What's going on, superstars? I'm really so dope excited to have you here at this moment. In this video, I'm going to share with you how I scalp gold. If you're really interested in scalping gold, make sure to stick with me up the end so that I understand how I do it, and you can also implement the same strategy which I use into your trading chart or into your trading style, and you see how it works. And if it works good on your side, just come back to this video and then you make a comment in down there below. And if you want to be getting the free signals from me when I trade, and then you trade with me, also the link is down in the description below of this video. Go on and hit that. You will be taken directly to our new Telegram channel. So without wasting time, let us go in directly to the chart.
All right, now we are on the chart. So what you see here right now, that is how the market is moving. What you always to identify first, you have to identify the trend where the market is heading. Where the market is heading. Now you can see the market now have been making the high highs and the higher lows. So why you have to identify that the market, if it breaks the swing this high, that is obviously a buy. If it breaks the swing low, that is obviously a down trend. So what you have to identify that whenever you come to the chart, you have to find which the swing is broken in the market. Which swing is broken in the market. Now, if the market have been moving like this, are you getting the point? You have to identify that what was the last recent swing to be broken. The last recent swing which is broken will help you to identify exactly the trend. And when you are trying to identify the trend, you have to use the higher time frames. Those there should be H1, H4, and the daily, weekly, so that you do what? You identify these trends. Are you getting the point? So we can see that the market, the last recent to be broken here is this one, because we have the major structures and the minor structures. Now this one, you can see it is a major. Are you getting the point? Why? Because this leads this structure here down to be broken. So we were still on a downtrend, and then we break this recent lower high and this the recent high, the swing. Are you getting the point? Which made this heady and shoulder, you can see. So this was a move which was giving us a sell, and then now the trend it have changed from the sell to the upward. So the market moves high highs and high lows when it's trending, and then it moves the lower lows and the lower highs when it is trending down. And another thing, it moves on equal highs and equal lows when it is on a ranging period. Now if the market is making the equal highs and equal lows on a ranging period, but if you come to low time frame, you will find that the market is making the higher highs and higher lows. So it will be good if you find the arranging period is on higher time frame but is not in a low time frame. Whenever the market is arranging on a low time frame, we don't need to trade, but if it is arranging on higher time frame, it will help you also to catch the small moves like 50 pips, 30 pips, like that, because we are scalping. So we have a trending move, and then also we have when the market completing the trend, starting another trend. So what do we do here? When the market making the high highs, here we have to look the continuation. We have to trade with the market, and when the market is completing its trend, we have to identify the reversal. Are you getting the point? which means that the market have been going up, making the high highs and the high lows. Now it have changing its direction, breaks this low. Now we are going to start see the lower lows and the lower highs. So our role is to identify here, to identify these two areas, when the market makes high or when the market changes its direction. Those are the two things what we have to be identified. When the market is trending upward or downward, we're looking the continuation. And when the market is reversing, is finishing the trend, we have to identify the reversal. So when do we trade the continuation? When the market making the high, make low, we have to see that the market has break this recent high. When the market breaks that recent high, we have to identify our point of interest. This is going to be our point of interest, or what we can call the demand and supply zone. We have to identify them, and then we wait the market to come to our point of interest, and we look our entry here, and then by using our entry criteria, we bring the market upward to break this recent high. So when we are catching a reversal, we wait the market to be making these high highs, and we wait to see that we have got a change of character or a change of trend, and we look the potential point of interest, and then we take entry here and we continue. If the change of character was not looking good, what we have to do when we're catching a reversal, we wait the market to break this recent lower low. It comes, retest any point, and then breaks structure again. Then we wait to catch the continuation when it comes to make a retest, whether it retest here or whether it finding the favorable gap or it comes to the order blow. All of this area here, it's our point where we're supposed to be looking to take the trade, and we continue with the continuation of the new trend. I think you have understand how we trade this gold. This is the only thing what we need. So when the market breaks the recent high, we identify our point of interest. So when the market comes back here to our point of interest, we have to go to the low time frame. When we come to the low time frame, we have to find when the market moving at around here comes to our point of interest. When it hits our point of interest, what we have to do, we go to the low time frame, and then we find something like this. This is minute 1, taps to our point of interest, and then also we have to see a change of character, which gives us that the market have changed from the downtrend. Now it's ready to start moving to the uptrend. So we wait here in the low time frame. We wait here in the low time frame. We break this structure here. After breaking that structure, we identify in a low time frame our point of entry. We come, market comes, tapped in. This is when we take our sniper area here, stop loss below, and then the TP to the high time frame, this higher high, because we are expecting that the market is going to move and break this recent high, forming a new high. Are you getting the point? So when we catching a reversal, also we wait the market in higher time frame to change the direction. We see it have changed the direction, it have break this structure. What we can see that this is our change of character. This is our change of character. So after seeing that change of character, we have to identify our demand area here, or supply zone. Are you getting the point? So we wait the market to come and tap into our point of interest. When the market taps to our point of interest, we come to the low time frame. This should be minute 5 or minute 1. So when it comes here, we have to look something like this in a low time frame. So we wait the market taps inside of it, and then we see a change of character. Are you getting the point? We identify our order block here, we put our pending order, and then the market comes, mitigate us, and we continue with the new trend. So that is what we only have to be looking. And let me take you to see some examples. Now you can see here, this is H1, this is H1. So if we can see very well here that the market came very well, make high highs and higher lows. So here it's when we shifted and we break this structure. You can see at around this area the structure was broken. Now we had to identify our last buying candle, which is giving us our point of interest. You can see here around this area is when the market gives us a change. Is the market when it gives us what? A last selling candle. Now you can see it came very well, tapped in. After breaking here, it came very well, tapped in. We drop down to the low time frame to identify the change of character. Market come back, tapped us in, and then we continue with this move. Are you getting the point? So after identifying this move, you can see the market did the same thing. If we go to H4, you will find that this area here, it is what it was an point of interest also. Are you getting the point? Then the market also came and tapped in, moved in a low time frame, come and mitigate, and then it continues with the trend. Are you getting the point? So if we can come in H4, if we can come in H4, you will see it very well. You can see here in H4 what happened when, let me try to zoom out like this so you can see it very well. So you see that this exactly, it is our what? Our point of interest. Why? You can see that the market made here a break of structure. We came, we made a new high low, and then we continue up, we make a new higher high. When we made a new high, do you see that here we have a break of the structure, and then the market came to do what? To mitigate this order block in H4. So we continue with what? With the trend. Are you getting the point? So this was a double tops here. These double tops, we have some good cash here which are sitting here. This giving us that the market still continuing, is still to go up to come and take this liquidity. Are you getting the point? So when you get this point of interest here, if we can mark it very well and we drop down to the low time frame, you will see how the market behaved. Let me do like this. So this is our high time frame order block or point of interest. So if we come to the low time frame, this is, let us go to M5. Now you see very well that the market, how it came playing. Market, how it have come playing. Now, when the market reached on our point of interest, it came making the lower lows and the lower highs. Now, at around this area is when we have a change of character. After having a change of character, we have to identify the last selling candle. This is our last selling candle here. If we come this side, you can see that the market came and tapped in very well. So this is our entry. This is our entry. Now, when we're entering, you can use depending orders, or we can be waiting to see how the market, if it will also respect this order block in M1, because it can bypass throughout, continuing making the lower lows and the lower highs. So we have to wait and we see the momentum candles. So these are the momentum candles. If you can see very well, we had a good bullish engulfing candle here. That is our confirmation. Are you getting the point? If you want to do more confirmations, we don't take the trade right there. So we have to wait the market to break this area. We are still in low time frame, this swing high. If the market breaks this swing high, yes, now we find what have break the swing high. What have break the swing high? We find the last move to push it up. Are you getting the point? We wait the structure. If the structure is not clear, we also wait. You can see very well when we break this, and also we break this. All of these are a continuation. You can see after breaking that, where the momentum started from to break this, we started from this area. The market didn't come inside of it, but after that we break another area. When this happened, you can see that now the market, it might not come back to this area. So you have to keep this in mind. It can come or it might not come, because the momentum now it have started. You can see that it's making the high highs and the higher lows. It will be very hard to come back at this side, because we remember we are moving from the biggie point of interest order block of high time frame. Now the momentum it have gone, it might not come back. So you have to go to follow with the flow, because the market it have already break the structure, made a new structure here, come down and also break also a structure. So we have to catch the continuation here. We identify another new order block here. You can see it is this one is where we are taking entry from. You can see the market came and mitigated it very well, and it started moving upward with momentum, and it have not come back. You can see how it moved all the way up like that. So it is vice versa. When we are looking the sell, when we are looking the reversal, also we use the same concept, we use the same rules to see that we are catching our move. So if we go back to our double tops, so you can see how it mitigated them when we are looking for the reversal. Remember, this was our structure which was broken in H1. This one, after break it, you can see this was our point of interest. We identify the order block. Are you getting the point? The M1 or M5 order block. So if we identify that, you can see that when the market came very well, it tapped in very well. How do we identify the valid order block? You can see here, you can see that there is some points which have been mitigated, all of them, but they are one which have not been retested. So the market have to come back and retest. That is going to be the order block or our point of entry which has not been retested. Now you can see the market came very well and retest. So if we do like that, you can see where that white line lies. And if you look, this is our order block here, which was not mitigated. And when the market came back here very well, if you see that the white line, it tapped inside there, and then it moved with a big move, big momentum to come back to test in high time frame of H4 order block and continue with the high trend. Are you getting the point? So you can trade both sides, even though the market it is trending. I think you have learned something. No matter how market is trending or comes back to make a retest and continue, this could be opportunity. Also, this could be opportunity. Are you getting the point? It's also to know when are you timing it. When are you timing it? So market can show you, can tell you when the move comes up like this. You can see it will show you that now I want to change this move. It have ends. Now I want to go back to make a retest to this order block, because the high time frame, if it is daily, the days to come, the days from here to come back to here, you will be making a lot of money. Are you getting the point? Rather than to wait the market comes here and then you start from here to go up, because here it can spend almost a week to come back here. If it is H4 here, it can spend 2 days to come back to here. So this is a big move which gold can give you over than 200 pips. And also, when H4 is trying to reverse, it will show you why is going to reverse. It will give you some patterns here, and you know, and then you're jumping in. Also, you're jumping in. Are you getting the point? Both sides, you use them as like a pro. That is how we trade gold. If we have got value from this video, or if you have learned anything from this video, make sure to drop it in a comment section. And if you have not subscribed to my YouTube channel, go on and hit that subscribe button. Click the notification bell to be notified at any time when I release a new video like that. And don't forget to join our free Telegram channel, is down in the link description below. See you today in next video. Peace.